Brothers and sisters, are you ready to see the light? I said, brothers and sisters, are you ready to see the light? Then let's get converted. Hi everyone, I'm Marc Lichtenfeld, Chief Income Strategist for the Oxford Club. Welcome to State of the Market. And if you like these videos, go ahead and click that subscribe button. It's absolutely free. And if you don't like these videos, sign up one of your enemies. That's fine too.
Hey, is there a butts here? See more butts?
We accept all types here at the Church of Convertible Bonds. Now you can keep your faith and traditions and we won't make you wear the beige unisex jumpsuit. But by the end of this video, you will reconsider everything you think you know about bonds. On the most basic level, a bond is a tool used by companies and governments to raise money, essentially selling IOUs to regular Joes like you and me. In return, the Joes get annual interest payments. Bonds have been around for centuries, but the type of bonds I'm preaching about today aren't the bonds your granny gave you for your 10th birthday. Now, typically, you buy a bond for two reasons: income and safety. When a bond reaches maturity, the face value of the bond is returned to you in full. In the meantime, you collect the interest as annual income. So if you buy a $1,000 bond, you'll get $1,000 back on top of all the interest you've been raking in over the years. If you buy the bond at a discount on the secondary market, for example, you make a little profit on the face value. And even if you buy a bond at a premium and take a loss on the face value, it can be worth it for the interest you collect over the years. Now, investors' appetite for risk varies wildly with age and income. But I think it's safe to say that none of us likes losing money, and it's hard to beat bonds for sheer security. Unless the company goes belly up, you will get your $1,000 back when the bond matures. The company could be trashed, their earnings could be terrible, their CEO incompetent, their stock down the toilet. As long as they're keeping the lights on, you get paid your $1,000. Now, you know me, I'm all about that base. And income, safety too. But with regular bonds, your potential upside can be limited. That brings us to the topic of today's sermon, the heavenly, the divine, the convertible bond. Convertible bonds have all of the benefits of a bond with all of the upside of stocks. You heard me right. You get the safety, you get the income, and now you get the added sweetener of potential windfall profits. If you're ready to convert right now and want to know what convertible bonds are on my radar, click the link in the description below. But if you need more information, allow me to read from the gospel of the convertible bond. A convertible bond is exactly what it sounds like. It's a bond that can be converted into stock at the request of a bondholder. The bonds are convertible at a set price for a set amount of shares and can usually be converted at any time up until maturity. So let's say you pay $1,000 for a convertible bond of Initech.
Did you see the memo about this?
The bond matures December of 2024, pays a 4% coupon, and is convertible to 20 shares of stock at $50 each. Currently, the stock is $40. If over the next couple of years the stock never gets above $50, you wouldn't convert because you could buy the stock cheaper in the open market. But meanwhile, you collect your 4% interest on the bond, and in December 2024, you get your $1,000 back. No harm, no foul. Now, let's hop into an alternate timeline. At the end of 2023, the stock is trading at $150. You decide to convert your bond to stock, you call your broker, let them know, and now you own 20 shares of Initech at $150 a share. You have just made a $2,000 profit on a $1,000 investment. Alternatively, you could sell the bond on a secondary market for a huge premium because it's worth more thanks to the higher stock price. However you want to play it, you're walking away with a windfall profit. When investing, you typically have to take big risks if you want opportunities to make big gains, and if you keep your risk low, your returns are often smaller. Convertible bonds are one of the rare cases where your risk is low and your upside is limitless. And considering everything going on in the world today, considering all that, it makes sense to seek opportunities with a major upside that actively lower your risk. And that, brothers and sisters, is why I preach the truth of the convertible bond. For more information, click the link in the description below to find out the names of some convertible bonds I've got my eyes on. Thanks for watching State of the Market. I'm Marc Lichtenfeld. I'll see you next week.